Yo, what is good, guys? It is BJFX. I'm coming at y'all with another brand new video today. I hope you guys are all having a blessed day so far. Pretty much what I want to talk about in this video is the moving average. Now, before I really get into any of this, I just want to say this isn't going to be like a surface level video of what a moving average is. This is more so going to be how to put the moving average into action. So it's going to allow you to really get some sniper entries and really understand momentum of the markets, because momentum is a major thing. Okay, momentum is what is driving the markets where and what amount of time. Okay, I like to trade momentum. I like to be able to get in the markets and get out, not very fast but very efficient, so I can get in, hit my take profit, get out. If it is a losing trade, hit my stop loss, get out. That's just what trading is. So to start us off, I'm looking at GBP USD on the daily time frame. And to really get into how the moving average works, it's just gonna obviously show you your momentum. So when I'm looking at the lower two moving averages here, the 20 and the 50, basically the stronger a pair is trending, the lower it is going to be below these two moving averages. So if we notice that around this level, price is showing some major wicks and major rejection off this level of the moving average, that's showing us that there's major sell side pressure. So when I do see lower lows showing up in the markets around or below these moving averages, something I like to do is I like to mark off my previous lows, and I like to see if price breaks them. Now, if price does begin to break them, and especially if we see wicks coming below it in rejection candles, I would like to get more on that side of the momentum. Okay, so I'm gonna overall be showing you guys a trade setup here on GBP USD for potential buys. So for the most part, we are on a daily time frame and we see a spike to the upside starting from this low. And what do we have? We have a little bit of consolidation. So if we take a step back and we look at what most retail traders are doing, we would be drawing this. We will be drawing this, and obviously this is what we call support resistance. So a lot of people would be selling right here. Okay, people who don't really get the full, don't really have that full understanding of what could potentially be happening here. Um, for the most part, they could be looking to sell around this area. Now, I'm going to show you guys why I would potentially want to buy around this area. If we do look right here in the past, we noticed that it was pretty simple in this consolidation. You notice that we had to push up, push the downside, push up, push the downside. So around this time, we had a major break below. Now, this major break below did not hold up. We seen a push back to the upside, we seen a pullback, and we seen price begin to trade and break out of our 20 EMA. Now, if we do look at the 20 EMA, we can notice that we had rejection. So another thing I like to do with this 20 EMA is if price does break above it and shows potential rejection, that could be showing me that we could have more pushes, a more stronger move in that direction that the market is breaking and rejecting from. So being that this market is rejecting from the downside, we can potentially be seeing this market move more to the upside because it is showing rejection off of the moving average after we see that break. Okay, as we see that break, we push up past this this 2500 psychological zone. We do see that price opens up above it. So when you are looking at your moving averages, you're gonna want to pay attention. Is price closing above them? Okay, if it isn't closing above, if we look at things like this, where we see price close below our moving average multiple times, that shows us that the pressure to reverse isn't necessarily in the markets for the most part. Especially if you have wicks showing rejection. Right here we have what we call a 3-bar play, which is pretty much like a reversal signal on a higher time frame. Then we see a push to the downside. However, right here we have price close above our EMA 3 times in a row, as well as if we look right here at this candle, these candlesticks, we have rejection, major bullish engulfing starting right here, and then we see a break out of every EMA. So once that does happen and you realize that there is rejection coming from the downside, you want to pay attention to what price is doing as a whole in the zone. So we notice price rejected in the past, it rejected in the past, and right here, what does price do? It starts rejecting, and then we have this candlestick, which is pretty much like a bullish hammer, for the most part, showing rejection from the downside. So at this point, when my candlestick is showing me something potentially like this, I wouldn't be selling on this resistance. I would let the market do a little bit of its thing, and then I would potentially look to enter something. So I would go ahead and I take this off my chart, and basically the 20 EMA, like I said, is going to show reaction when you have a strong trend. So if price breaks out showing rejection and shows rejection, you could potentially be looking at another push to the upside. The more EMA's price breaks, obviously the more momentum the market is having, being that EMAs is something that measures previous data. So if price is beginning to break above this previous data, it's showing that price is stronger than usual. So something I do, 200 moving average is going to react when price has a healthy trend. Okay, if you look in the past, you can look in the past, it will show rejection sometimes. However, if price if price is below your 200 moving average, you will be wanting to sell. If price is above your 200 moving average, for the most part, you will be wanting to buy. Now, this is the daily time frame, so that will give you a little bit of bias here. So what I would do is, being that price has showed us a rejection candle up into the moving average, I'd press play and I'd want to see what happens. Now, we notice price just closed above the 200 EMA. Now, back to what we were saying about the importance of a closing price. That shows us that we have a level that has held through, the momentum, because there was a lot of sellers in this market. And if we notice, we just made a new high. Okay, we made a new high around this area, which potentially could be showing us, that we had a bigger push to the upside that can possibly be coming. All right, so a new high, we know that price kind of topped out around this 2650 psychological level. And then we did see minor rejection from the top, but also minor rejection from the downside. And price had really reached that 2700 zone with a little bit of rejection. So being that price did close, I'd probably want to work my way down to this lower time frame. And I would really want to see, for the most part, what is happening. So we do notice that we did get a break of structure. So your first option, with this break of structure would have been you taking your Fibonacci from the downside to the upside and entering and getting a potential trade opportunity to go long and take it up to this level at a 272. You wouldn't have went up to the 618. Obviously, it would have been your choice. Stop losses, should they be tight? Should they be wide? Once again, that's to depend on your trading style. If you want your stop loss to be tight, you're going to have to take more losses. Okay, you're going to have more stop losses being hit, but at the same time, your risk to reward ratio, your returns on your trades are going to be much better. And then we also have like a little trend line forming around this area. So this would have been your first potential winning trade, just based off of looking at the moving average. So we did see a break of a new high. Another thing, you guys should always be paying attention to previous highs in the markets. If we see that price is showing rejection here and we see a break above that, that could potentially be showing us that something could be happening in the market. Something could be happening in the markets, especially when we throw this in confluence with a higher time frame where we see prices beginning to break and close above the moving average. So at this point, if you did win that trade, you should be out of it once you get a deep pullback, breaking that previous low, and just kind of see what is happening. Okay, go ahead and see what's happening. So being that price did touch this and it's showing rejection, I would definitely take my Fibonacci down from this low back up to this high, and I would be going long somewhere right here, and then I would go ahead and target. Now, you have a couple different options when it comes to entering on this break and retest type of situation. You can aim for the previous highs, which in this case would be this area. Okay, stop loss somewhere around here. You can aim for these previous highs, but at the same time, keep in mind that previous highs are going to be your best bet when it comes to getting price to go back in your direction. However, if you're looking at a continuation or a large extension, you could be aiming for something like the 618 or the 272, and that would have been a 178 pip move. So if we look right here, on the 4-hour time frame, what the 4-hour time frame is doing is it's showing major reaction to these moving averages. So let me go ahead and click and take this off the charts. Let's go ahead and get this off. Take this off the screen real quick. Okay, so there we go. So for the most part, if we're looking at the 4-hour, we did notice that price has done what? It's broke this new high. And if we look at the candle, We look at the candlestick, it's already showing major rejection. Also, if we look at our moving averages, we had a minor dip below this level of structure, which didn't really hold up. And then we seen price break back below, close below, and then push to the upside. Around this level, we did have a EMA crossover, which once again does show more potential shifts in direction, especially on the lower time frame. If you do get one to show up on a higher time frame, and ever since those EMA crossed over, we noticed that it kind of stayed in that direction. And we did get that 20 EMA to cross over the 50 as well as the 200. So the more this EMA crosses over previous EMAs, the more this trend will begin to develop in terms of strength. So we'll notice that around there, EMA crossed. Around here, we did get reaction to the EMA, a little bullish engulfing candle, and then a push to the upside. Around here, we had a little bit consolidation block, and then we did still get rejection off of this EMA. Push through the upside, break of this previous key level, and then a little bit of reaction there, a pullback. And you can notice that anyone trading potential support resistance would have wanted to enter right here. Okay, they were not triggered into their trades. However, anyone who was trading this moving average, they would have been able to get into that trades, especially if you notice you did have like a bullish engulfing. Price did engulf that previous candle. And then you had potential more potential buy opportunities, and you can see that the overall flow of the market is doing what? It's showing us reaction, and showing us the key component that we do have a strong trend. So at this point, you wouldn't be one to trade based off of market structure or support resistance. We would just want to be getting in a direction of where the strength is. So once again, let me check out this daily time frame real quick, and you can see that prices has a bullish hammer candle forming on a daily. And we did get a break of the high. You may have to look pretty close for this one, but if you look at this high is larger, more substantial than the previous one. So back to the 30-minute time frame, we kind of just got to pay attention to what price is doing. If we do get stopped out, once again, that's totally fine. You're going to want to adapt. You're going to want to get back in with a clear mind. Okay, so boom. Now, this is one thing you want to pay attention to. Okay, we did reach our previous highs. TP1 was hit for 86 pips. Now, TP1 was hit. You always want to ask yourself, what is price doing next? So if we notice here, what is price done? It's broke to new highs. So when price does break new highs, that can be, you know, a small clue that price can be making another potential higher high, right? Especially if you notice here, price does begin to show reaction off that 20 EMA, and then a breakout to the upside, very small. So we could be potentially seeing like a minor pullback, then another push to the upside. Okay, so let's go ahead and see. Once again, you should be mitigating risk at this point. You really don't want to have too much risk into the markets with something when you do have those previous highs being met. Minor pullback. Here we go. And we can see that price is kind of showing substantial reaction. However, we do see a pullback, and we could be potentially seeing another continuation to the upside, especially since this pullback wasn't that deep. Okay, always pay attention to the size of your pullbacks as well, because that will give you clues on where the market could potentially be going. Now, once you do see new highs being made, that should really build your confidence that this trade could be really escalating. So we do have TP2 that was just smashed for 125 pips. Now we are on to looking at TP3. Okay, will TP3 be hit? We'll go ahead and see. Very close. Okay, in this case, we will pretty much be out at break even, and this will be about 125 pip trade if you did decide to secure some profits. Okay, make sure that you are mitigating risk, especially once price is at that level. So you should have got out with profits as well as a break even if you did want to hold your trade, you know, for the long term. So now I want to walk you guys through GBP/AUD, also known as G8, which is a very nice pair to trade as well. So GBP/AUD is very volatile. This is a trending pair as well. This pair trends very strongly when it does move, for the most part. So I am on the daily time frame at the moment, and what I'm going to walk you guys through is how price is moving according to this 20 moving average, which is blue. So what do we notice here in the past? Price is trending up. It is in its cycle, making higher highs, high pullback, high pullback, and then we see major rejection. We see some major rejection. Okay, now once this major rejection happens, we begin to see that price is pushing down. We notice that it pulls back to this 20 EMA, shows rejection, pulls back to the 20 EMA, shows rejection, pulls back to this 20 EMA, shows rejection. So this, for the most part, is telling me, man, that this market is very bearish. This is just a bearish environment overall, so I wouldn't really be wanting to look to buy at any point in what is going on until we do see something happen, which is a close above our moving average. Once again, this is where the power of the moving average comes in, and it allows you to see that price potentially has closed above. Okay, we did see this bullish candle engulf this previous candle, and we do see that new highs were made. If we look at the high here, this was 81.38 level. Okay, we look right here at the previous highs. This is 81.34. So we did make a new high in the market, and even the most simple breaks of previous highs can really take price a long way, especially to the upside as well as the downside. So if we notice right here, EMA has been broken. Okay, don't really worry about the EMA itself being broken, but worry about if it is closing above, because you'll realize in the past we have wicks, which means that the EMA was broken, but it didn't close above, and we had major rejection. Once again, rejection. So when the EMA does get closed above by the candle, that gives you a little more, a little more of a clue, a little more of a hint that we could see more upside movement. Now, when we are looking at an EMA, I like to look at what's happening beforehand. We do have a double bottom / W formation occurring here, which is a reversal pattern. So this is overall a key level. We had a lot of rejection off of this 7,800 to 7,900 zone before this break and close above the EMA. Okay, so new high has been made. Obviously, we had like a key level right about here, and we did get a break of that level of structure as well. So let's go ahead and move this down to here. So for the most part, this will be potentially catching my attention for buys. So I'll work my way down to the 30-minute / 15-minute time frame, and I'd want to see what is happening here. So overall, what do we have? Gotta take this off the screen real quick. What do we have here on the 30-minute time frame? We do notice that price has made a higher high. Overall, it has made a higher high. Also on that higher time frame, we see that price did break and close above the EMA. So let's go ahead and get this one off. And we can mark off our high. We could definitely mark off our previous high. And if we look at this pullback retracement to this level, we see a lot of rejection, as well as price beginning to show rejection off of this 20 moving average. Once again, which is something we talked about in the past. You can realize when price was consolidating around this area, it wasn't really showing any reaction with these moving averages. A lot of wicks, a lot of rejection coming from both sides until we do see a break of highs. Once again, pay attention to your previous highs. We got wicks here showing rejection. We have a previous high here. However, we see a major push to the upside. Market does give us a little minor bullish engulfing candle, showing that this bullish candle was bigger than this previous bearish candle, and it breaks above this level, as well as shows a little bit of a reaction to that moving average. And then our new high of the market is formed right around here. So at this point, what I'll be doing was potentially look for buys if we can get a retracement back into our area. Reason for the retracement is because I don't want to enter on the breakout. I want a little more confirmation with a pullback into my entry area. So if we look right here, price does make a new high, okay, and we'll notice that price makes this low and then breaks above. So being that price did break above, what I'll be doing is I take my fibs from obviously swing low to swing high. We got a touch of our level. We'll be going long right here. Confluence at its finest. Fib zone combined with support resistance. Then our target areas. TP1 is always going to be your previous high. Okay, that's 0. 0 level is where your swing high is going to be. TP2 for the most part, 272 or 618. So we would just play this out accordingly. Once again, TP1 is going to be your best bet if you want a one-to-one. Okay, you got to figure out what you like the most. Okay, you got to figure out what you like the most, because it's all about sticking to your plan. It's all about really repeating this over the long term. So TP1 is going to be hit, no doubt. It's like TP1 is always hit if you build enough confluence. And then you just got to worry about that high being broken. Once you get that high broken, that gives you a little more confidence that price will approach more levels. So we noticed that TP1 was hit, TP2 was hit for 63 pips, and then let's see if we did get a TP3 hit as well. Okay, boom, TP3 hit for 92 pips. Beautiful trade setup. So pretty much what I'm preaching here, man, about the moving averages, and this hits the 8200 probably as well, 8200 psychological. But overall, what I'm trying to preach here about the moving averages is it tells you something that normal price can't. Okay, because it takes historical data and it throws in what price is doing now compared to what it usually does, and if you could see a potential sign of momentum. So it kind of separates you. You know, if you ever sold on resistance and didn't know why you got stopped out, it's probably because there was enough momentum in the markets to continue to push price to the upside. So it's good to understand moving averages. You know what I mean? Obviously, they look clean on your chart. That's why I initially started using EMAs, because I like the look of them. But over time, I found ways that's really helped out my trading. So we see if this did hit the 82. Yep, hit the 8200 psychological level. Know that psychological zones are very important in the markets as well. So that's pretty much it for this video, guys. I hope you all have a great, amazing, blessed rest of your day. Make sure to leave a like, make sure to comment, make sure to subscribe if you haven't already. Once again, hope y'all enjoyed it. I'll catch y'all in the next one. It's been your boy BGFX. I'm out. Salute.